PPP update. I want to do this update because it's related to the example we're going to talk about later. And in here, there's a 5 update. So when someone comes to you goes, whoa, that PPP changed a lot, and you just in your mind, I want you to remember that there are only 5 of them. And today, I'm just going to go to 3 and 4 for you because those are the ones we need to talk about with our example. And of course, the number 3 is loan forgiveness. A lot of people, a lot of you don't want to get into PPP because the forgiveness can be troublesome. And it's too much requirement. 8 weeks is too short. So now it changed on June 5th, okay? So before it incurs, the expenses need to be incurred or paid during 8 weeks period. Right now, it is 24, all right? So example would be that if you got your money on May 4th, before they ask you to spend it, and before June 22nd, now they're saying, oh, wait, you can spend it slowly till October 19th. Okay, so that is the difference. Longer time. Longer time means that your paycheck can get stretched out. You don't have to pay yourself, more than what you're really supposed to pay. If your workload is reduced, you know that you're supposed to make less, right? So that 24 weeks gives you a break on there. Also, on non-payroll costs, remember it was 25% of the total forgived amount. So now that is said to be a 40%. So let's say you got $10 PPP amount to be forgiven. You use $6 for payroll. You can use $4 for rent, mortgage interest, utility, and also the cell phone or internet connection. Remember, there's some more guidelines coming out for those non-payroll costs. So that is a good news. That news probably brought you over here today with me because you want to know now, how do I apply for it? Because I think I can make it for 24 weeks. The number 4 changes on the Flexibility Act is to loosen up the restoration requirement. Remember, they require business owner to put back the number of full-time employee like was before. That date, that magic date, that safe harbor date is June 30th, right? So now that is changed. That is changed. They're saying that by December 31st, 2020, okay? Then here, restoration on full-time employee, that's wages by December. And full-time employee also by December, folks. You got more time. You got more time. If you got your PPP on May 4th, on October 15th, I think the previous slide, after 24 weeks, and as long as you restored your FTE and the wages by December 31st, you can go on January the 1st, 2021 to apply for forgiveness and you would get it. And also, more importantly, they also implemented a exception saying that, you know what, we understand some of you cannot even get there because your business is literally going down. You can take time to bring it back up. So there, new safe harbor provides, this new safe harbor provides that if you can document a inability, okay? Sorry, let me put back. If you can document the inability to rehire, if you can document the inability to return to the same level of business activity, then that is not a problem. You can have less FTE, you can have less wages. All right? See, listen to that. That is a Flexibility Act and signed into law on June 5th. So that's why we're saying that PPP is really going to work magic for small business now. You just need to understand how to qualify for the forgiveness. So there was 5 things changed, right, from Flexibility Act, and we covered 2. We covered the 3 and 4. 1, 2, 3, 4, 5. I covered them in extensive length on my June 6th videos. webinars. That is on YouTube. If you go to YouTube, you type into Community CPA channel, and you will see that there. Or you can come to our website. We have all of them on our website too. Now, come to my point. Apply for PPP is not late. It's not late because it closes on June 30th. And we still have $100 billion available in the system. That is waiting for small businesses that too scared of applying, thinking it's too complicated, and those businesses to apply, okay? So now you ask me, Ying, where do I apply? And number one, you go to your banker, whoever you do bank with. If you don't have any banker to go to, and there are lenders, the virtual lenders, they're online that you can tap into and apply online with them. So I have two lenders, which I know on the internet. If your inquiry of that, and just give us a call because we want to give that to you. The reason I'm not telling you not right here on the webinar, because I need to make sure that they are still accepting applications. Some of them closed down, so I want to make sure that I'm not giving out wrong information. So now, first of all, it's not late, right? And then you need to fill in the form 2483. And so this is the one that I want to bring you to there. And when you apply for PPP, you need to go to 2443. And even though, you may be already done the application for your bigger company, okay? You have a bigger company that runs pretty well, and you had already gotten PPP, but you have a smaller business that you never thought it was worth applying, but now maybe to rethink about that. So now I am going to bring you to my to the form I was talking about. So you're still seeing my screen, and I'm going to make it bigger. So this is the Paycheck Protection Program borrower application form, right? And right here, and you see you can check sole proprietor, you can check partnership. So this is the two that I am going to talk about. I definitely included independent contractor because they are like a sole proprietor, so that you will see how this thing was done. Right here, everything is so straightforward. There are really no curveballs. The only thing you need to know is you need to calculate average monthly payroll, which today I'm going to teach you how to calculate for sole proprietor, how to calculate for LLC members, and how to calculate for independent contractors and a single member LLC. Okay? So I'm teaching you how to calculate this. So average monthly payroll, then you times 2.5, and you are the only employee, so you put in 1, and you are going to check payroll, lease, utility, and right here you can check others. You can put in traffic or transportation, right? So here are the owners. You're going to put in your name or your LLC name. So straightforward. This is the 2483 I was talking about. Now, let's go to our example. We have our first example, okay? Jesus has a Schedule C. So Jesus has a sole proprietor small business, okay? And 2019, he did a tax return. And that tax return had income of $85,000, expenses of $25,000, and his net profit for the Schedule C was $60,000, okay? And so the tax return was done, and so he has to pay self-employment tax of $8,478. He has to pay federal income tax $1,303, and he has to pay Iowa state taxes. I calculated Iowa and didn't use Minnesota, and that's $1,469. But whichever state he is in, he will pay that state tax. So we knew how Jesus is doing. So now Jesus saying that, oh, I want to apply for PPP. I was so scared of paying it back. Now Ying just said that they loosen up the requirement. Forgiveness kind of possible, and then for sure possible. I want to apply. So we go ahead, do a calculation for Jesus. But before I do that, I want to show you his tax return. So follow my screen. So now I am going into Jesus' tax return. So this is the 2019 tax return Jesus filled out. Okay? And nothing too strange. This is exactly how the tax return looks like. And Jesus is single, and he had done some business. So let's take a look of his business. And so he had a profit and loss statement, and in the 1040 is called the Schedule C. Am I right? So look at this. Jesus' name and his social security number, and the lawn mowing and the snow removal business. This is his home address, and he's actively participating. So now, remember on our slide, we said he made $85,000 sales, and then we had a $25,000 expense. Of course, I made it simple. I really should have breaking the $25,000 into different cost category, but I didn't because I'm just wanting to give you the point. So here, I have line 31. That's a $60,000, and this is regarded as a sole proprietorship salary. This is, listen to me really carefully. Line 31 under Schedule C, it is regarded as a salary for that sole proprietor, for Jesus. All right? Now, let's go back to look at the page we were in. So we were in the first page. We understand this line 7A, that has our Schedule C net profit. Okay? But we did a bunch of adjustments. Now we're wondering, what are these adjustments? So let's take a look what they are. So they are business income. And then Jesus also bought a 401k solo plan. So he actually contributes $16,000 a year to the solo plan. So that's what he does regularly. And he also pays $12,000 on medical insurance a year. And this $4,239, it is the self-employment tax calculated on the $60,000, but they allow half of it to be reduced from the income. So if you add the $4,239 plus $16,000 plus $12,000, we come up with $32,239. This number reduces income tax number because they say that, the government says that, well, we don't need you to pay this income tax because this one will give you a break. 401k is not supposed to be taxed on income until you draw it out. And the $12,000 medical premium are not income taxable, and that is a one that only self-employment taxable. Okay? Now, we have Jesus is single, and so he has a standard deduction. And this $3,112 is what in 2018 the Job Act came out, gave a qualified business deduction. That's the 20% of the deduction get calculated based on the business income. Okay? And so with that, 27,000 minus that, so our taxable income is 12. So let's look at the second page. So we have our real tax dollars on the line 14. This is your real tax dollars. This 8,000 is self-employment tax. If you recall, when I was showing you the slides, remember? And on Jesus 1040, I said that's the self-employment taxes. That is the federal income tax, state income tax. So that's where it's come about. So now let's do calculation for Jesus on his PPP amount. So I applied for PPP to be 18,333. Now you're saying, wow, Ying, how did you get that amount? I only could figure out maybe it's the 60,000, the net profit, on line Schedule C, line 31, okay? And divided by 12 times by 2.5. No, the definition of payroll cost includes the line 31 Schedule C plus health insurance payment. That's on Part 2 of 1040 on line 16, plus 401k Part 2, line 15. So that's a 60,000 plus 12,000 plus 16,000. I got 88,000. Now, that 88,000 divided by 12 is my monthly payroll cost on that form I showed you. Let's go to that form, folks, right here. This is the average monthly payroll, and then you times 2.5. This gives us the 18,333. So if it's not fillable, otherwise I will write there for you. It's 18,333 right here. And then you put in one employee, then you check all the boxes here, then you put in your name, your title, 100% ownership, your social security number because it's not an EIN number, and your home address, check all the boxes, and you're done. So you just applied PPP amount. So I have to say to you that when you submit this form, and there are lenders has their own underwriting process, they could come back to argue with you that, well, we just want to take 60,000 divided by 12 times 2.5. We don't want to bother with the other one. But it is you need to know what is the definition, and you are the one going to work with the lender to have them give you the maximized PPP amount. And I have seen plenty. I have seen plenty of people applied PPP, but the amount was so significantly reduced. I don't even know why they would be reduced. And I figured maybe in the very beginning, when PPP came out, it ran out so fast. Everybody is so worried about people who come later would not have enough money. So the lender might be told or might be directed by good heart of whoever and trying to reduce other people's PPP so there's more people can apply. And it did happen, and there's plenty of people getting less PPP than what they deserve. But when you do it for yourself, with the knowledge you have today, I don't see the reason why you are not discussing that with your lender. And it is really your job, and it's not Ying's job to do that for you. So you can do that. Now you have the knowledge. Okay? So this is Jesus on Schedule C, and he got $18,333. Now, let's go to C and how to do forgiveness process. Now, on June 1st, Jesus so excitedly, he received $18,333. And he came over to me, gave me a hug. Oh yeah, I forgot it's COVID-19, no hugs, but kind of sent me a nice email and say, Ying, I'm so happy I got it. Now, Jesus got a new job because in 24 weeks, he has to spend it, right? But it's 24 weeks. So from June 1st to November 16, he will spend his $18,333 on payroll and the non-payroll item. Flexibility Act said the payroll can be 60% and the non-payroll can be 40%, right? So it's no longer 75-25. So now Jesus did this. Jesus wrote check to himself to pay wages for $11,000 total. Okay, so he did it every other week. So he wrote himself a check for $11,000 total within the 12 weeks. And also, Jesus got so happy and busy, and the summer is so good. There's never really an issue with grass growing crazy, so he did a lot more work, and he even hired his girlfriend. And in my example, they get married very fast. So this is his girlfriend coming in, $5,000 paid to his girlfriend to help with his paperwork, including helping him to file forgiveness for the PPP. All right? I already gave the job to the girlfriend. And $2,333 paid for a truck, a gas, related in the covered period. So great. So he spent the money, and the number of employees by December 31st, 2020, he met that. So his employee is good. He is himself. He even increased one, right? So he spent all the wages, and now November 17 roll around, and he said that I'll apply for forgiveness. And the banker took his application, and he's done. He got his money. He spent it properly. And at the end of the year, the banker will send him a 1099-C, and it's right here on the bottom, my dear. And you really, really need to know, what do I do? No, we're not in here yet. And so we need to see that the 1099-C will come to you, and it is so important. You have the right tax preparer to do the right job for you, because very easily people can put that into your income without you knowing it. You probably not even realize you are paying taxes on it, but it's calculated all in the big pot of 1040 basket, and you didn't even know who is paying what. And so you already mixed the self-employment with your income taxes, and you don't even know whether you paid income taxes or not on this one. But make sure it is an election you have to do on your return in order that 1099-C to not be taxable at all. Okay, so now we just kind of finished an outline for Jesus, who is a Schedule C filer. Am I right? And you saw his tax return, and that is how it is. And you also see that I also laid out for you right here, and for the taxes that he was paying, $1,303 and $1,469. And one of our clients was doing similar calculation. So he goes, well, I don't know, it is worth it because I'm getting $18,000, but I pay almost $10,000 taxes. So he was adding all of this together and saying that $8,478 plus $1,303 plus $1,469, I pay too much taxes for only $18,000 I bought. And I hear him, but my argument is the self-employment tax should never be considered tax. That is your Social Security. That is your old age security that only adds benefit to you. And if Jesus die early and his kids is under 18, Social Security even pay the kids money all the way till they're 18. So Social Security is not just to make sure that when we are old, we have a pocket money to spend. It is also a security for the kid. See, in this example, Jesus already have a girlfriend, and he's gonna be in the lightning speed, gonna make that girlfriend wife. Then in the lightning speed, COVID-19, there's a lot of COVID-19 babies, okay? So the baby is gonna come out, and it is even more important to have self-employment tax paid to Social Security Administration to give your children a security blanket. And even though you didn't buy life insurance, that's okay, but the government will take care of them till 18. Okay? So now, let's move on to another example. The next example is actually called Jesus LLC. Okay? And in this case, Jesus is a single member LLC run small business. And remember, single member LLC is also called disregarded entity. So disregarded entity just means that from tax standpoint, I am not attorney, so cannot speak attorney language. Plus my English is like Chinglish, right? So I'm telling you, this is just tax. And in tax world, that LLC is like not existed. It is a pass-through. It's not pass-through. It's actually a disregarded. So it treats Jesus LLC exactly like Schedule C. However, it is a little different in certain way. So I'll show you how the taxes is different. Okay, but you know that the result of taxes is not different, right? See, we still have the same taxes. And look at that. When we apply PPP, we still have the same amount. So a single member LLC in the application of PPP in terms of the dollars are the same. Let me go to the other screen to show you what is the LLC look like when they are a single member LLC. So now I am going to go to Jesus tax return. You can see it with me, all right? And the only difference, I will quickly go there for you. And the only difference, ladies and gentlemen, look at this. It is name the proprietor, Jesus. His last name is Text. And this is his social security number. But look at that. I also have a employer ID number here. All right? And Jesus LLC right here. And the business, no change. It's still lawn mowing and snow removing. And I also still materially participate. And I also have this $85,000. I also still have the $25,000 expense. And line 31 is $60,000. Same. Okay? Now, let's go to our first page. Remember when we had Jesus by himself and he had all these deductions just like how we look at it right now, because the Jesus LLC is treated exactly the same as a Schedule C. So Jesus also so smart. So he bought the 401k deferral and the half of the self-employment deduction and also $12,000 on medical insurance. See that? So he has the $32,000 to reduce his taxable income, and he came through with $8,479 on self-employment, and he is exactly the same way like he was. Okay, so now, and I want to point it to you, even though the number is the same, there is a huge difference in PPP application. Do you know what that is? What is that difference? Let's go to see what is that difference. Now, right here, and you will no longer choose sole proprietor. Even though you are a single member LLC, you are disregarded entity, you're going to choose LLC. And you will no longer put in your social security number here. You're going to put business EIN number here. And your business legal name is Jesus LLC, right? And when you put in the number, although it is still the same as 18,333, but this PPP borrower application form, it will be made under Jesus LLC. So it's not Jesus test with social security number anymore. It's Jesus LLC with the EIN number. And then you may ask me, well, Ying, so what's the difference? It is different because when you receive the loan forgiveness documentation, it will be under the LLC. And let's say something happened to Jesus, and say that he gets deported and, just couldn't take care of his business anymore, and, he hasn't really married, so nobody take care of him, and the business just dropped. He's gone, right? And because the loan is written under LLC, so when that company is gone, and SBA don't have collaterals under here, and even if he didn't apply for forgiveness, that loan probably just going to be bad, okay? And the bank who applied for that loan probably will work out with SBA to written that off because it is under Jesus' business EIN number. But let's say it is under Jesus' social security number, and then there will be a lot more going on because he's not dead. Okay? The business closed down is equivalent to a person who is dead. So obviously, we're not dead yet, so it is always going to be something we need to deal with. But for business, because it is under business, so it is available to be bankrupt, right? We don't have to file personal bankruptcy. Business can go bankrupt. And our president filed so many bankruptcy, but I don't think he bankrupt himself personally. He's bankrupting those companies that doesn't make money and owe too much money. All right. So with that, I want to point out a difference. Why Jesus LLC is a big deal, and why would we even bother? Why can I just forget about it, do it under my name? No, if you had LLC, you need to apply under LLC. Now, Jesus LLC received PPP on June 1st. And so 24 weeks to spend, he did it. He did the same thing as he did with, his one company. So everything is good except that 1099-C from the bank will be sent over to Jesus LLC, but not to Jesus Test. All right? That is our second example. So we talked about sole proprietor. We talked about single member LLC. Now, remember I told you that Jesus has a girlfriend, and they just, they met each other the day before, they got married the day after, just fast. So now, Jesus and Maria LLC. So they joined a partnership, okay? And now the husband and wife runs a lawn mowing company together. Jesus works the work. Maria just supervises him. But she is a real boss, okay? So that's why even though she doesn't do the real work, but she has 50% of that LLC. So Jesus has 50%. So now let's look. Let's look what happens when you have a partnership and you want to apply for PPP loan. And 2019 tax return, 1065. Same thing, that business makes $85,000, expenses $25,000, net profit $60,000. 50% Jesus, 50% Maria. And on the 1040 tax return, this is a result because they're married, okay? So we're filing them together. And so they paid self-employment kind of like half of it with what the first one we see on Jesus, remember? And it feels like that's a marriage benefit, isn't it? And then pay federal income tax and pay state income tax. Actually, those are the ones got increased a little bit. And there's a reason to it. Now, I want to say that they applied for PPP, and with all of these things, do you know that they actually can only apply $12,083, not $18,333 we were talking about early. And you're going to ask me why? Why is that? Remember, this Jesus is the one working, Maria is the one bossing around, and so Maria's effort to the business is not a sweating, working job. He just, bother Jesus. Jesus would do better job without her. I'm just kidding. Don't tell Maria. Don't tell the wife that because they're all going to be really upset with this example. And then, but Jesus is the one working. So Jesus' income is the only one will pay self-employment tax. And Maria is just treated as an investor. As someone invested in the LLC, is a passive member. She doesn't sweat. She is just enjoying being a boss, right? Now, let's look at our 1065, how that works. I am going into my secret place to show you the returns. All right, bear with me. It's coming. There. See, this is 1065, a tax return. And in here, we had $85,000 income. We have expenses of $25,000. And don't get confused with the two of them because they're just a total here. And then the net is $60,000. And now, do you realize that this is Jesus? And Jesus, last name Test, first name Jesus, he got 30, right? 50-50, remember? So he got 30. But I want you to pay so much attention to line 14. Under 1065K1. Folks, I want you to realize that if you have a 1065K1, the person can apply for PPP is the only person with line 14 has a number. Right? Now, you want to say, well, I want to see what Maria looks like. Sure, Maria is here. Look. 1065K1 for Maria is 0 because she didn't work. She was just bothering Jesus, taking money from her new husband, and but she got a share of $30,000. That $30,000 cannot be used to apply for PPP. Now, let's go to their tax return, 1040. This one, see, they got married. They are filing Mary filed jointly. And, well, they don't have kids yet. Not that fast. COVID-19 does help, but takes quite a few months to do. And here, we have 60, of course, because the reason we have 60, because we have a 30,000 plus 30,000, both of their income. But now, if I look into my schedule, you see, Jesus, he still qualifies for the 401k deferral, but his deduction on self-employment tax suddenly is half of what he used to have, because the other half was given to Maria, And so she doesn't pay self-employment tax, so there's no deduction. And you're going to ask me, hey, what happened to that $12,000 medical premium? For partnership, that medical premium went to Schedule A. And remember, we had, after they get married, their standard deduction is huge. It's $24,400. So $12,000 medical, premium, it doesn't going to amount to anything. So that was disregarded. And now, because of that, their deduction is not as big as it was when they were sole proprietor. So now they do have to pay self-employment tax, but it's $4,239, and their income tax is $1,740. Okay, so with that, and now I am going to show you this slides. Remember, we applied for PPP. So now look at how this calculates. It's 1065K1 line 14. What was that number? 30,000. Plus health insurance payment. Remember, it didn't really come in for income tax purposes, but it is an eligible item for PPP calculation, so I didn't forget it, so I add that in. And the 401k, that's a Part 2, line 15, same place to pick it up. So 30,000 plus 12,000 plus 16,000, I got 58. When I have the 58, I divided by 12 months, so I came up with a monthly, and I times 2.5. So my number of this is $12,083 for PPP. Now, only Jesus qualified for PPP. Very, very important. And if you have a LLC and 1065, you pull out your 1065 K1s, and no one has a number on line 14, that just means that LLC cannot apply for PPP. And while I said that, I give one exception. I knew when I said that there is one exception. Let me go to that exception because I don't want to forget that. Right here, my dear, you follow me, and we have this government K1 1065, right? You saw it, and if you see a 4A has a number in here, okay? If 4A has a number in here, that is also qualified to apply for PPP. But you don't have to. If you have a 4A, you don't need to look under here. But if you don't have 4A, you want this K1 of 1065 to have something qualified for PPP, you are looking at 4A and 14. Okay? You may say that, is it possible to both of them exist? Yes, it's possible. Okay? So that is the exception. When I say, oh, you have to look at 14, I guess I need to tell you that also guaranteed payment. Okay. Now, let's go back to our example of the newlywed, and they become husband and wife. Now they're applying for PPP. And so Jesus received that. Maria helped Jesus to apply, and Maria got Jesus $12,083. And they spent that within 24 weeks, and this is the total paid to Jesus, and this is the amount paid non-payroll tax, non-payroll cost. And then they make sure that Jesus is still on the job on the end of December, and to make sure that the application was submitted to for the forgiveness loan right after 24 weeks. And when you got a 1099-C, that amount, $12,083, that needs to be reported on 1065, not anything else on 1065. all right? Not under Jesus's and Maria's joint return. Okay, so this is really a core example I just gave you. We talked about sole proprietorship, and we talked about single member LLC, how that is literally similar to sole proprietorship, except the loan is issued under LLC, not under Jesus's name. But we also talked about how Jesus dated this girl and got married so fast, so they are now filed married joint return, and they have a 1065 joint partnership, and Jesus is the only one working. That's why only his K1 is qualified for PPP. But you will say that, okay, what if Maria is actually not like what you think? She really helps. And Jesus mows the lawn, she actually fixes the lawnmower. And if that's the case, Maria should have her income also under 14. So that way, and she will be qualified for PPP as well. And remember, then Maria could be getting $16,000 on deferral for 401k as well. And let's say Maria also have her own health insurance, then she would get exactly the same amount as Jesus got for $12,083 and twice, right? So that is how the how our PPP calculation goes. The application for forgiveness comes through. Then my last slide in terms of covering the content. So I want to say to you that if you can do the calculation between your tax forms and your PPP, that's the best to do. Right now, a lot of people didn't even file 2019 return yet, but PPP is still open. So why not? Now get your taxes done now, so you can calculate what PPP you are getting, and comparing the taxes you pay, the money you get, and the PPP dollar is not a tax saving. PPP is dollar falling from sky, and it is really free money in your pocket. And you don't really pay, it's not the same as tax saving, because when I talk about tax saving, we save $100,000 on expense, but you only really save taxes for the percentage of that expense, because your tax rate is 50%, then you only save 50%, okay? But the PPP is not tax saving. It is completely free money. So if you have to pay taxes on additional income, but that additional income actually can yield an $18,000 on PPP, I don't see any math can produce a negative result for you. You definitely is having a real help from the government. Okay, so that would be a advice. Say get it if you can. And our small businesses, so many of you are just so scared of government, and I don't know what to tell you for you to realize that as long as we're following the rules, there's really nothing to be scared, because the government is really meant to do good for people. Even if the rule come out, it's really not perfect, but it takes time to make it perfect. But in the process, you learn and you know how to work with the system. And that is actually something I realize it is really the shortest for small businesses, because we are so bogged down by our real business in and out, and we try to stay away from government regulations, don't want government to get involved. But as long as you put that money in a separate account, as long as you spend it according to the rules, and it is a free money. So I call that inflation equalizer. It is an inflation equalizer. You should, as long as you use our currency, and you will experience inflation if you don't get your dollar in to help you in a certain way. Okay? And good accounting is very important. I cannot tell you how important that is in this critical time. I know people will say that, well, you know, I have a good accounting, I will pay more money, and I'm already short of money, but really the kind of help and organization you get from paying a professional, it will way overrun the expenses you're going to incur for not knowing the rule and making mistakes and possibly even be charged with criminal conduct because it's felony when you are not doing it right by the book. So it's really my advice. And when, you know, I'm not attorney, so when I go for legal advice, I go for the best attorney I find, and after that, price-wise, I do not care, just because I know, and you can't discount professional people's brain. You can discount a product, but when you go to discount a lawyer's brain, and they really gonna function just for the percentage that you paid for. So for that regard, and I just think that look for a professional you like that speaks your language and really understand your thought and help you to get through this. And that would be my today's advice for our webinar.